In part 2, we talked about the flight plan. We started with the business tax savings radar, which helps identify possible tax leaks, planning gaps, and coordination issues. Then we talked about the sellability scorecard. That answers a different question. Not what is my business worth, but is my business actually sellable? A business can generate income, support your lifestyle, and still have weaknesses buyers use against you. Things like owner dependence, messy financials, customer concentration, weak systems, thin management, unclear growth opportunities, risk exposure, all of those can lower value, slow down a deal, or kill buyer confidence. That is why the scorecard matters. It gives you intelligence before a buyer, lender, or deal team turns those weaknesses into leverage. But once you know where the leaks are, the next question becomes, what do we do about it? That is where Map ATC comes in. Map ATC is where the bigger picture comes together. It is a coordinated review of your business, personal wealth picture, tax strategy, insurance protection, advisor alignment, and exit readiness. It is built for owners who know they need more than one-off advice. They need a flight plan. During Map ATC, we look at your tax posture, insurance exposure, advisor coordination, owner dependence, family protection gaps, and what would make the business more valuable, transferable, and attractive to a buyer. Then we build the roadmap. What happens first? Who needs to be involved? What is urgent? What creates protection? What creates savings? What increases enterprise value? What prepares you for the biggest payday of your life? Think of Map ATC as air traffic control for your financial life. Your CPA, attorney, insurance coverage, estate plan, wealth strategy, and exit plan should not be flying in separate directions. Map ATC helps coordinate the advisors, strategies, documents, and decisions that impact your wealth. When the time comes to get serious about a sale, we move into the exit flight plan. That is where we focus on valuation readiness, buyer scrutiny, operational cleanup, deal structure, risk reduction, and exit positioning. This is where owners stop guessing. They learn what buyers value. They learn where buyers attack the deal. They learn what needs to be fixed before going to market. They learn how to prepare the company so the exit does not depend on hope. That is the full runway. Business tax savings radar, sellability scorecard, Map ATC, exit flight plan. From first look to future exit, the goal is the same. Help you keep more of what you earn, protect what you built, coordinate the people around you, increase transferability, and prepare for the day your company becomes your largest wealth event. Here's where I recommend you start. Start with the Business Tax Savings Radar and the Sellability Scorecard. Together, they answer two critical questions. Are you leaking money, and is your business actually sellable? Those answers can change everything, because if cash is leaking, you need to know. If the business is not transferable, you need to know. If protection is weak, you need to know. If advisors are disconnected, you need to know. And if future exit value is exposed, you need to know before a buyer tells you. This is not some generic financial checkup. This is a business owner review built by someone who understands taxes, risk, wealth coordination, and M&A. Your business is not just a business. It feeds your family, it funds your future, it carries risk. One day, if built correctly, it may become the largest financial event of your life. Doing nothing does not keep you safe. Doing nothing does not reduce taxes, close coverage gaps, make your company more transferable. Doing nothing does not prepare your business for buyers. Doing nothing just keeps you flying blind. So here is the next move. Start with the Business Tax Savings Radar and the Sellability Scorecard. Answer the questions. Let us review the situation. If there is a real opportunity, we will show you the next best step. Maybe that is deeper tax planning. Maybe that is Map ATC. Maybe your business needs an exit flight plan before you go to market. The point is simple. You need to know. You need to stop guessing. And you need a coordinated plan. Again, this is Tony Miller, and if you own a business doing 1 million or more in annual revenue and suspect money may be leaking, risk may be hiding, or value may be trapped inside your business, start with the Business Tax Savings Radar and the Sellability Scorecard. Your money matters, your protection matters, your sellability matters, your exit matters. Start now. The best time to build the flight plan is before the emergency, before the buyer, and before the IRS becomes the one asking the questions.